FHA and USDA and how they work for investing. My name is Peyton Fisher, and on this channel we talk all things real estate and investing. I am a licensed real estate agent and general contractor here in the state of Utah. Let's get on with it. The first loan I wanted to talk about is the USDA loan. It stands for United States Department of Agriculture. These loans are set up for areas of population that typically does not exceed 35,000. The area is designated as a rural in character, so it's a smaller town. And it has a serious lack of mortgage credit for low and moderate income families. This loan is set up to really help people on the lower end of the budgets. This is for single family units only, not multi-units like a duplex or a triplex. The pro on this loan is that you can get 0% down. You only need to have a 640 credit score to make it through their automated underwriting system. And they can approve you manually with a lower score. You just have to reach out, and there's just more paperwork that goes involved with it. So you can rent this house out after being in there for more than 12 months. You can get a co-signer that can help you with your debt to income ratio. Now, downsides. If you have a bad credit score, you won't be able to get this loan. You're not supposed to rent this out for at least 12 months after owning it. You're not even supposed to rent out a room. However, you might be able to get away with it if you don't make more money than you're supposed to qualify for this loan. You just have to live in the rural area, and if you really like that big city feel, then this loan won't really work for you. Now, the next loan I wanted to talk about is the standard FHA loan. This stands for the Federal Housing Administration. Now, this loan will teach you also some patience, because if you're trying to invest, you do have to wait 12 months before you can rent this house out. If you can find a multiple unit, such as a duplex, triplex, or a quadplex, FHA loans can be purchased as long as you are living in one of the units. Now, if you buy a bigger complex, you are going to have to come in with more money down. So a typical FHA is 3.5% down. So let's say on a single family home, you're only going to have to bring in about $3,500. But if you buy a quadplex for, let's say, $300,000 to $400,000, you're going to have to come in with at least $10,500 down. And don't forget about the closing costs either. If you can't find a multifamily unit, the nice part about the FHA loans is you can legally rent out the rooms and collect rent. So if you're okay with couch surfing in your own house, you could literally buy your first house, sleep on the couch, and have your roommates pay the mortgage and potentially more. Now, I might add that it would be a little bit easier to do this if you're single or without kids, because once you get kids, it makes it much harder to get roommates. This is also the easiest loan to get because you can have a FICO score of all the way down to 500 to 579 to get this. But you do have to have 10% down, and you have to be willing to find a lender that'll work with you if you have a score that low. A lot of lenders cap it off right at about 600. As long as you have a FICO score of over 580 with a 3.5% down, everything else is the same, as long as you have verifiable employment history for the past 2 years. So remember also, this doesn't have to be at the same job. As long as you've been employed for 2 years is what they're looking for. One of the downsides on this loan is you are going to have PMI, or property mortgage insurance. This is typically between 0.5% and 1% of your loan, divided up by 12 and added on to your loan. So if your loan was $300,000, you would pay between $1,500 and $3,000 a year for property mortgage insurance. So if you divide that up by 12, that's about $125 to $250 extra dollars a month that you're going to have to pay until you're able to get to 20% equity in your home. So for the short term, yes, this will be more expensive. However, if your goal is to get into a rental as quickly as possible and you're willing to rent out your rooms, this is a great place to start because you only have to have that 3.5% down. Now, these are just two of a whole bubble of loans that you can use for investing. You just have to make sure that you follow the rules, you read through your paperwork, and you understand what's going on. So I'll see you on the next video.